Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me to wrap up our virtual Singapore FinTech Festival coverage is Nguyen Trieu. He's the co-founder and CEO at the Center for Finance, Technology, and Entrepreneurship to discuss how payments have transformed banking. And it's great to meet you virtually. We appreciate you wrapping up our coverage. Welcome to Trade Talks.
Hi, Jill. Thanks a lot for having me. It's a great honor to be the last one on the Singapore FinTech Festival.
We saved the best for last. And I think it's a great opportunity because you have a lot of good insight into the evolution of the financial industry. And my question to you is, how have financial institutions evolved over the past 10 years as a result of payments, which has really changed the way we do things?
It has definitely a lot. Just to give you some context, I was an entrepreneur, then banker, then entrepreneur. And when I was in banking, it was quite clear that the largest financial institutions were banks. It was a given. But if you look in terms of what has happened over the last 10 years, 10 years ago, definitely the largest financial institutions were all banks. If we looked in terms of market caps, you take the 10 largest ones, all banks, many Chinese, American banks. A few months ago, we did an analysis and we looked at the top 10 today. And do you know how many banks actually are left? Only 5 out of 10. There are 5 banks left, but actually there are 5 payment and platform companies, which are Visa, MasterCard, Ant Group, Tencent, and PayPal. Mm-hmm. So that's quite interesting to see how in 10 years that has totally changed. And we thought that in finance, you had to be a bank to be big, but that's not true anymore.
And that's my question to you, because we take it for granted how easy it is to transact business or making payments. It's not as smooth in the US as it might be in areas of APAC who have had the benefit of not having central banks, and they could start with a fresh ecosystem, a fresh infrastructure. So payments, it sounds simple. I send you money over PayPal, you receive it, I get my product. So tell us more about the business model. How do you make money in payments?
So you're right that payments is something that we all know about. We use payments every day. At the same time, when I was in banking, so I was a managing director at Citi in my last position. And as part of my role, I basically advised Citi, other financial institutions, banks, insurance companies. So I thought I knew quite a bit about how finance works in general. From the very broad macroeconomy, central bank policy, monetary policy, down to the very, very specific, for example, regulatory capital, inflation hedging. But at the same time, I knew nothing about how payment works. I knew very, very little about how payment works. For me, it was something which was under the hood, which was the engine behind it. But and I think that was the same for a lot of my colleagues. I think in banking in general, more people would know about, for example, what is an interest rate swap, for example, than what is an interchange fee. And so because of that, the business model in banking is very, very well known. It's lending versus borrowing. That's what we know about, and that's where most banks make their money. It's like 2/3 of their money.
As someone who's not intimately involved with banking and the fintech process as much as you are, why do I even need a bank? Can't I just transact business with you? Can't we go onto PayPal? Can't we go onto other forms of transacting money? Why do I need a bank at this point?
And I think that's a fundamental question, which we need to ask now, which before you needed to have a bank because it was really complex and cumbersome, basically, for you to do this directly with anybody else. Now we've seen a few different trends that basically really makes this question essential. And those trends are regulation, for example, regulation in Europe with PSD2 and open banking. This is the same that we see across the world. In Singapore, you are starting to see the same kind of regulations, which makes it very, very simple to take money from a place to another place and not really needing anything in between. So regulation. But what is making it even more important is technology. Before you couldn't really do it. It was really difficult to match things. And what we've seen is the advent of blockchain. We've seen the advent of central bank digital currency. We've seen basically money being digitalized in a different way than what we had before. And because of that, it's starting to feel like, just to give you an example, if you were born 2,000 years ago, at the time of Jesus Christ, for example, the way you would pay is quite simple. You would have a coin, and that could be a gold coin or silver coin, and then you'd go and pay with it. Then you're, let's say, teleported, 2010 years later. So in 2010, and you could do pretty much the same. You could take your coin and go and buy, here I am in London, and I could buy with my coin. 10 years later, in 2020, there are some places in the world where you can't do that anymore. In China, you can't really go and pay with a coin. You need to have your WeChat to pay. And so in 10 years, suddenly a lot of things have changed, whether it's paying on your phone, or whether it's paying through a contactless card, for example. And what is likely to happen is that over the next 5 years, it will accelerate much more. Why? Because now everybody has a phone. Physical money is starting to disappear, but at the same time, central banks are starting to rethink what is money. So this is why it's going to be really, really interesting, and the role of a bank, but all the players in the financial ecosystem will be rethought over the next few years.
And I'm glad you're my last guest, because I'm going to continue to throw questions at you. I would imagine it's all relative. It's a bit arbitrary. I have look, here's my remote controller for my teleprompter. It's assigned a value. Coins are assigned a value. Paper fiat is assigned a value. So when we think about digital assets, we're assigning value to technology. Shouldn't it deserve that value because you have the technology and the security and the blockchain technology behind it? I think it's worth that valuation to a certain extent. We could place the valuation on anything. We do it to stocks. We do it to bonds. We do it to commodities. Why can't software as a digital asset be the next valuation that we apply money to?
So that's a really interesting question. Just as background, for the last few months, we've spent, thousands of hours to work on a series of courses on payments. And why did we spend so much time? Is that because when we started to think about digital payments, let's say, blockchain, Bitcoin, all of these kind of things, then actually we had to go back to the foundations of what is money. Why do we use money for? And for example, here you mentioned money. One of the functions of money is a store of value, and it's about trust. And we've seen over the last 10 years the advent of Bitcoin, for example, where we said we don't really need to have this trust from, let's say, governments and central banks, and we can have it decentralized in a system. So that was one way of looking at it. So far, what we've seen is that in terms of widespread adoption, you haven't really seen it yet, because people, after 1,000 years of using money and trusting a government or a central bank, it was difficult to change that behavior. But why is it accelerating? It's accelerating because now central banks are also getting into this space, and central banks are starting to think, we've had physical money for a very, very long time. How do I replicate it in the digital world? Basically, what is money in the digital world when I can't touch it anymore? And of course, even the touching it works most of the time. When you have hyperinflation, when you have run of banks, then people don't really trust money anymore, but most of the time it works. And so all those questions are really, really interesting questions, because in 10 years' time, we might be, or we will be, in a very, very different world.
Agreed. And thank you for taking the extra questions, because I can't touch my paycheck, but I know my direct deposit is there. And that's something that we were not all on board with even, 15, 20 years ago. So thank you so much for the extra questions. It was great to see you. Hope to see you on the ground next year in Singapore. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.